Okay, let's prepare a statement of retained earnings for Florex Arrangements. This is Florex's income statement for the year ended December 31st, 2016. So we're going to prepare a statement of retained earnings also for the year ended December 31st, 2016. So for the entire year of 2016, because remember, a statement of retained earnings, you have to specify what period you are referring to. As of this date, you have these account balances. Okay, so let's get started. First, we'll put our title. Business name is the first line of the title. Okay, Florex Arrangements. Okay, the second line is the name of the income statement or the financial statement that you are making. This is a statement of retained earnings. Okay, what the third line of your title, what period are you referring to for this statement of retained earnings? Well, we're talking about the year 2016. So year ended December 31st. Year ended December 31st, 2016. Okay, so the first thing we want to indicate in our statement of retained earnings is we're going to show, the whole point of this is to show how much money did you earn during this period, how much money did you have total built up to pay yourself, and then how much did you end up paying yourself. So how do we show what is the total pile of money that we have available to pay ourselves? Well, first we'll start with what was our retained earnings balance coming in to this year. So how much money had we earned in the company and retained before we started 2016? So the first line will be the retained earnings account balance. I'm sure it'll give us this to us. January 1st, 2016. So at the start of this year. January 1st, 2016 was what? $4,900. Okay, so that's coming into the year. By the end of the year, we had generated equity. We had generated net income, right? And that's also available for us to distribute to ourselves. Well, how much net income did we generate this year? Well, that was calculated by the income statement to be $25,000. So your next line, net income, $25,000. Okay. So next, what you want to do is add these two numbers up. 25,000 plus 4,900, and put a line that has no title here, but just has these two, the total here, 29,900. So now what this is showing you, okay, for this year, this is how much, this is our pile of money that we had available to distribute to ourselves, the owners. Okay. Your next line will tell you, okay, in 2016, how much did you pay yourself? Well, this is a public company or a corporation, not necessarily public. Corporations don't have to be public, but dividends. So we're talking about dividends when we say pay ourselves. So your next line will be the dividends line. Dividends. How much did you pay yourself? This is going to be a negative number because you reduced your retained earnings account to pay yourself. Dividends of $4,100. Okay, and your final line shows what is your new account balance at the end of 2016. So this will be your beginning account balance when you do your statement of retained earnings for 2017, right? So final line is retained earnings account balance December 31st, 2016. 29,900 minus 4,100 is equal to $25,800. I guess you put a line here. So I don't know. This doesn't look very formal. It's kind of messy. There might be exact formats you need to follow for GAAP, generally accepted accounting principles, but the idea is the same. All you're doing is just giving someone a presentation of what happened with retained earnings that year. That's what you really need to understand. What was the balance of the retained earnings coming in, the pile of money you had saved up in the business coming in, how much net income did you make that year? Add those two up. Now you've got this big pile of cash available for you to pay yourself. How much did you take from that to pay yourself? Now what remains in your big pile of money in your business? This communicates all of that information to anyone of interest. Okay, so let's make a balance sheet for Lisa Arrangements. As of this date, December 31st, 2016, we have these account balances. We have already made our income statement for the entire year, and we have made our statement of retained earnings for the entire year. You want to make these financial statements in this order of income statement, statement of retained earnings, because as you see from previous videos, for the retained earnings statement, we use the net income in this statement, and then we'll use our retained earnings balance and transfer that into the balance sheet. Okay, so let's get started. Let's first put our title, 3-line title, business name, name of the financial statement, and the time period or specific point in time you are referring to. Okay, this is going to be a specific point in time because it's a snapshot of our accounting equation. So business name, Lisa Arrangements. Okay, what is this? What is this document? What are we talking about? This is a balance sheet. Okay, so great. That tells us two things. We know what business we're talking about. We know it's a balance sheet. But what point in time are you speaking of? Okay, this is December 31, 2016. And you can see also you couldn't put a period here. If you put the year of December, well, that makes no sense because assets can change throughout the year, right? You could have, for the entire year, you could have 365 different balance sheets if you performed transactions every single day throughout the year, right? Okay, so let's start with the left side of our accounting equation. As of December 31st, what assets do we have? Start at the top with the most liquid of assets. Cash is perfectly liquid because it is cash. We have a cash account balance. How much cash do we have in our business at this moment? $5,800. Okay, the next most liquid asset is accounts receivable because we're going to be getting cash pretty soon. So how much of accounts receivable do we have as of this date? Okay, we have $8,000 in our accounts receivable account. Okay, next, let's see. Insurance expense, service revenue, no. Rent expense, common stock, cash. Salaries expense, accounts payable, no. We have office supplies. That's an asset. That's some physical piece of property that we are in control of, that we are using to run our business, right? Assets, accounts receivable, equipment. Okay, so I'm going to go ahead and put office supplies first. I guess that's more liquid than equipment. Office supplies. The total value of our office supplies on hand is $2,400. Okay, and then finally, equipment. We have equipment with a value of $16,300 total equipment. Okay, so that's all of our assets. Let's add this up to see the total value of this company's assets at this moment in time is what? Okay, 5,800 plus 8,000 plus 2,400 plus 16,300, $32,500 worth of assets. All right, let's move on to the right side of our accounting equation. Liabilities. What liabilities do we have? What do we owe people as of this moment in time? Insurance expense, no. Service revenue, no. Utilities, rent, common stock, cash, no. Accounts payable, there's a liability. Office supplies, dividends. Okay, so we have one liability, a liability of accounts payable, $4,100. Accounts payable, $4,100. And we're not going to total this. If we had more than one liability account, we'd list those and then total that to get a total liabilities line. Okay, stockholders equity. All right, we can divide that up into two parts, common stock and retained earnings, right? Okay, so to date, even before the year of December 31st, if you totaled up the entire amount of external contributions into our company in exchange for ownership shares, what is that balance as of this date? $10,000. So I'm going to say it again. This didn't necessarily happen in the year 2016. This is just to date the balance of your common stock. We could have started this business in 2013 and someone gave us $10,000, okay? But as of this moment in time, the common stock account balance is $10,000. Common stock, $10,000 worth of common stock. And again, it just shows you, let's say someone gave us $10,000 in 2013. You're still going to indicate that in this balance sheet because that's just that person that gave you that money in 2013. Well, he or she states claim to these assets because of that. Okay. Okay. So common stock and then retained earnings. Retained earnings. Remember, you calculate with revenues, expenses, dividends, but in the balance sheet, you don't care about all of those details. That's calculated in your income statement, your statement of retained earnings. It's just asking you, what is your retained earnings account balance as of this date? So just like common stock, this doesn't have to just involve the year 2016. It's throughout the entire life of the business. You've earned money, distributed dividends, earned money, distributed dividends. What is that retained earnings account balance as of right now, as of December 31st? Okay. Retained earnings. What is the big pile of cash that you have, or well, not the big pile of cash, but what is the big pile of net income that you have earned to date and kept in the business? Okay, we calculated this in the retained earnings statement, $18,400 as of December 31st, 2016. So yeah, again, it's not really cash retained earnings. It's you ran your business, you generated a bunch of equity. How much of that is still in your business? Okay, let's total these two up to get a total stockholders equity. Total stockholders equity is these two totaled would be $28,400. Okay, and let's create a final line that totals liabilities and stockholders equity, just to kind of recreate our accounting equation in a report form. So total liabilities and stockholders equity is $28,400 plus $4,100, $32,500, which is what we expected it to be, because these two need to be equal for this to make any sense.